Holy smokes everyone, in this video we're going to be going over the latest CPI numbers, and of course, as expected, they come in much higher. And of course, as we've all been talking about, inflation is getting out of control, but the markets are turning a blind eye to it because inflation and money supply going brr, it means their stocks go up, so they don't care if it destroys the poor's purchasing power and if it makes the cost of living unbearable. As long as the stocks go up, it's all good. Okay, so let's get into this new CPI data to see exactly how much it rose in May, what's going to happen in the future, and how we can prepare for what's going to be coming. Okay, so looky here everyone, consumer prices jumped 5% in May, the fastest pace since the summer of 2008. And what happened in 2008 again? I think something not that good. Oh yeah, that's right, it was a global financial crisis. Wasn't too fun in 2008. But also, listen to this. The 3.8% rise in core inflation rate, which excludes food and energy prices, was the sharpest increase in nearly 3 decades. And I know you're probably wondering, why has the CPI been so low for the past 30, 40 years when we all know the cost of living is skyrocketing out of control? Well, I'm going to let you in on a dirty little secret. They actually changed the way they recorded CPI in the 80s and in the 90s. Let's have a look at this. So if we look at shadow stats here, we can see that they changed the way they recorded CPI in the 1980s. Now, according to the 1980s way that they used to record CPI inflation, which seems a lot more realistic, I'm sure what you're all thinking of, it's actually 13%. And that seems a lot more likely with the way I'm looking at all my food going up, with the power bills going up, with the way transportation is going up, the cost of cars are going up. I think 13% is a lot more realistic. But even then, the 1990s, they changed it again to make it even lower. And the 1990s based, it's at 8.5%. And now, of course, they've changed it, and now they're saying, CPI is only 5%. When we all know the cost of goods and the cost of living is going up much faster than that. And listen to this, everyone. This is the most dangerous thing that's happening at the moment. Consequently, market participants generally do not expect to see the Fed to react to the latest numbers when the policy-making Federal Open Market Committee meets next week. And of course, the Federal Reserve's not going to act. They've completely stuffed up the whole financial system, and they've put themselves in a corner here. And really, they've got two choices, and there's no good outcome for either. First thing would be to do their job, and when inflation is more than 2.5%, official CPI is more than 2.5% of their mandate of 2%. Remember, their mandate is meant to have price stability. But what are we having right now? Everything, gasoline, used cars, food, commodities, everything's skyrocketing out of control, and the Federal Reserve saying, don't worry guys, this is just transitory, suck it up peasants. Imagine if I came up to you and said, hey man, I'm going to punch you in the face. Yeah, it's going to hurt, but don't worry, the pain will be transitory, it'll be over soon. I'm sure you're going to be like, nah man, I don't want to be punched in the face. Well, you know what the Federal Reserve's doing now? They're punching you financially, and they're telling you, suck it up, princess. They're destroying your purchasing power, they're making the cost of living more unburdensome, and they're making wealth inequality get even worse because the rich that have assets, they can afford higher inflation, but the poor, where the majority of their income is spent on food, housing, and transportation and utilities, they can't afford 5% transitory inflation. But I'm sure Jerome, with his $1 million salary and his $10 million portfolio with BlackRock, he's sitting back and not really caring too much at all. Because look at this, everyone. This is a chart from the actual Federal Reserve, and this is the Consumer Price Index for all urban consumers and all items in the US cities average. And as we can see here, from the 70s, when they went off the gold standard, the Consumer Price Index has gone parabolic and the cost for urban consumer items has gone parabolic. But what's also happened? Well, also your dollar's purchasing power. The index has gone from 1,000 in the around 1913 when the Federal Reserve was created. And look at this. Since the Federal Reserve's created, what's happened to your purchasing power? Boom. Oh, I got a little bit of bump here, and then boom. Your purchasing power has gone all the way down to 37 from when the index, when the Federal Reserve was first created, was in the 1,000. Listen to this, everyone. This is crazy. Used cars and truck prices continue their climb higher, rising 7.3% on the month and 29.7% for the past 12 months. I'm sure with all these stimulus checks and tax credits, people have been loading up on used cars, and they're up 30% over the past year. And remember, transportation for many people is an essential item. The new vehicle index increased as well, 1.6%, its biggest single month-on-month gain since 2009. Again, the post-financial crisis era. And it's up 3.3% for the 12-month period, the highest move since November 2011. So I guess everyone's going to have to break out their bicycles and start doing a bit more exercise because they're not going to be able to afford to drive around anymore. Not only cars are going up, but gasoline prices are going up crazy, which we'll get into in a moment. The gasoline index is up 56.2% over the past year, part of an overall 28.5% increase in energy during the period. 56%. Again, like I said, transportation, your car's up nearly 30%. And then to fill that car up with gas, that's up 50%. But the Fed's saying, don't worry, guys, just transitory, suck it up. Food prices have remained comparatively tame. Well, I definitely disagree with that. When I go to the grocery store, yeah, maybe processed foods are going down in value or aren't skyrocketing, but all the real food, all the real good quality food, good meats, vegetables, fruits, etc., they're going up crazy. It says here it's only up 2.2% over the past 12-month period. Do you agree with that? Because even though we haven't seen the crazy price increases now, look at the agricultural commodities. Corn up 40%, canola 35%, coffee 23%, sugar 12%, milk 8%, rice 6%. A lot of staples in people's groceries are going up way more than 2.2%. Now, I know the commodities future prices are different to retail prices, but it will eventually flow into higher retail costs if these future contract prices remain elevated for a prolonged period. And listen to this, everyone. This is crazy. A separate gauge that excludes volatile food and energy prices increased 3.8% versus the Dow Jones estimate of 3.5%. That's what I've been warning. We're going to have higher inflation than they're expecting. And of course, it is much higher than the official CPI data. So for so-called core inflation, this was the fastest increase since 1992. And of course, this is how they fool you. Investors, though, remain heavily focused on inflation, which hasn't been a major threat to the US economy since the early 1980s. And why has it not been a threat? It's because of this. They changed the way they report CPI in the 80s, and then they changed it again in the 90s. Because you know what happened in the 80s? That's when Alan Greenspan started QE. That's when QE was born. And so when they did QE, they needed a way to hide up their crimes. So all they do is manipulate the numbers, just general accounting principles. Just like what they do with their balance sheet when they're dumping $500 billion of US treasuries into the reverse repo market, but they don't update their balance sheet because they say it's just general accounting principles. Also, if you want to get some furniture for your house, that's about to get a lot more expensive. Household furnishings and operations rose 1.3%, the biggest month-over-month gain since 1976. So we're breaking a lot of records here, everyone, and not good records. So if you're planning a holiday, it's going to get a lot more expensive. And look at this, everyone. Look at car rentals. I guess because people can't afford to buy cars, car and truck rentals rose along with sale prices, jumping 12.1% to a compound, a 16.2% increase in April, and a rise of 110% from a year ago. That's absolutely crazy. And so another way we can look to see if inflation is going to rise is the job market. And for initial jobless claims, there was 376,000, and that represents a decline of 9,000 from the previous week and marks another low since March 14th, 2020. So the job market is improving. And if we look here, there's 9.3 million job openings, but unfortunately, it's a lot of low-paying jobs. and people making more money from the government getting stimulus. Now, obviously, it doesn't mean everyone doesn't want a job, but there is a large majority of people that are happy taking their stimulus and earning more, sitting at home, doing hobbies or maybe cash in hand jobs. And hey, I don't blame them. But not only that, continuing unemployment claims has dropped to 3.5 million from a high of 18.9 million. That was really devastating when that data came out during the height of the pandemic. But we can see that the unemployment claims for continual unemployment claims are improving a lot as well, which is going to lead to more inflation as more people get jobs and go out there and start spending. And of course, the Fed keeps lying, saying our money printing isn't contributing to the high CPI. Well, look at this chart. This is the chart of the M2 money supply and the CPI. Now, if you look at the black line, that is the M2 money supply growth, and the red line is the CPI. So we can definitely see here as correlated that when the money supply goes up, so does CPI. And when the money supply goes down, so does CPI. And you know the rate of M2 money supply, so the rate of the amount of money that was growing in the economy, during the last crisis, they increased it by 10%. It had a growth rate of 10%. But look what they did in this financial crisis. We had a growth rate of 27% in the money supply. So they're diluting your money by 27%. That's why we're seeing asset prices increasing, is because it's not so much that they're booming in price, but the dollar is falling and we're having high inflation. And the Federal Reserve pretty much has a stick and they're poking people saying, look, you got to invest your money, otherwise we're going to turn your money into nothing. And while that's been right over the past year, when the Federal Reserve does eventually have to lift interest rates, that's not going to be the good idea, because then the dollar's going to increase. And when the dollar increases, asset prices go down. And when interest rates go up, asset prices go down. Now, the Federal Reserve keeps saying, we're not going to do anything. We're going to let inflation run hot and we're not going to lift interest rates. Well, inflation may get out of control. Well, it pretty much already is out of control. They should be lifting interest rates now, but it may get worse. And then they may have no choice but to lift interest rates higher. And like I said in my previous video, that's what could lead to a huge crash. But what I'm even more worried about is they manipulate the numbers again, just like they did in the 80s, just like they did in the 90s, because they had recessions there. They find a way to manipulate the CPI data and they say, look, guys, I told you it was transitory. Inflation's, only 2% now. Well, guess what? The damage is already done. People's purchasing power, like I'll just show you these charts again, is already been destroyed. The prices of everything have already skyrocketed. So even if inflation is transitory, like I said, the damage is already done. The cost of living is already out of control. Food prices are getting out of control. Transportation costs, car costs, utilities. And unfortunately, a lot of retail investors are cheering on what the Federal Reserve's doing. You got a lot of people with the money print to go burr memes, and yeah, it's pretty funny. And it's good for people that have a portfolio of, say, around $1 million, because if the stock price goes up 10%, well, they've made a 100K gain. Where if the cost of living, say, for example, their yearly annual cost 50,000 and it goes up 10%, that's only a $5,000 increase versus the $100,000 gain they made in the stock market. So for people with a $1 million portfolio, they love the higher inflation and they love the money print to go burr and they love their dollar being devalued, because then that means the assets go up. But unfortunately, people that have assets, $100,000 or less, there may be a lot of retail investors that got a portfolio worth $10,000 and they'll see the portfolio go up 10% and they'll think, yeah, I'm going to be rich. They've made $1,000. Meanwhile, though, the cost of living has gone up 10%. So if their annual expenses are $50,000, then that means they're paying $5,000 more through higher inflation than last year. So really, though they've made $1,000 in the stock market, they're now losing $4,000 per year by having to spend an extra $5,000 more because of all this inflation, which the Federal Reserve is not doing anything about. So that's why this is so dangerous, and that's why I keep preaching on about this, because this is a lot bigger than just, investing. This is people's livelihoods and lives that they're messing with here. And we could see, people in the US fall into poverty, and, they think they're starving people in Africa. We're going to see starving families in the US. So everyone, Those are just my thoughts and opinions on the latest CPI data, the latest inflation data. Who knows exactly what the Federal Reserve's going to do? They're not being transparent with the people. I'm very worried that they're not going to do anything. Just let it run hot, bail out the banks, keep bailing out the rich, while the poor standard of living gets destroyed. Now, for all my loyal viewers and subscribers still watching, you're awesome. I just got a new mic, and it was like $1,000. I said to the person, "Oh, I want a good mic," so they recommended this mic. Okay, that's $700. Oh, it's pretty expensive, but okay, I can do that. Is that all I need? Oh no, you need an interface to use it. Okay, how much is that? Oh, that's another $300. Oh, damn it. Okay, I'll get the interface. So I'll just get the mic and the interface, right? No, you also need a stand. Oh, how much is that? Oh, it's about $100. Oh, damn it. Another $100. Okay, am I set now? No, you also need a cable for the mic. Another $50. Okay. Have I got everything I need? Yep, that's everything. Go home, plug everything in. I can't plug my headphones or my speakers into it. Oh yeah, you also need an adapter for the speakers and headphones. For crying out loud. So then I plug all this in, get it working, and then I find out that the volume is very low for the Shure S7MB, I think that's what it's called. And then they said, "Oh yeah, you need some adapter thingy to make the gain and make the volume louder." Oh, how much is that? Oh, that's going to be another $300. For crying out loud, people. I've dropped $1,300 on this thing. I'm going to be getting that adapter soon, so the volume will increase and the quality will sound a lot better, because if I jack up the volume right now, it's going to start cracking a lot and it'll sound terrible. But I will be investing heavily into the channel. I know the ads are annoying, but it does help me invest to get better equipment, and I'm going to be trying to improve as much as I can to improve the content for all of you. And of course, if you haven't already, please tap that like and subscribe button. And if you're bored, I'll put up some other videos here. I'll see you all there.